Welcome everybody, my name is Michael and today Bitcoin has hit over $50,000 again. So who knows, maybe the bearish tendencies will suddenly all disappear. But regardless of what's happening in cryptocurrency, while you're invested in cryptocurrency, it's always important to care about personal finance. And that's why today on this channel, we're discussing about your FICO score. So if you're in America or if you're in Canada, this is a credit score, although in Canada it's going to slightly differ. It's very similar where in America, the FICO score, there's also a Vantage score, but that's less important. That's with Credit Karma, you're able to check for free. It's always important to check from all three credit companies that will give you a report, and you can order one once per year for free from the American government because the FICO score will differ than the Vantage score. And the Vantage score is what a lot of companies, a lot of banks, and Credit Karma and these credit checking services will use, and it's not what the mortgage lender will use. It's not what the car salespeople will use. It's going to be in some cases lower, and that's what I discovered recently. So that's why I really recommend you to check both your Vantage score and your FICO score. And for those outside of America, a good FICO score is within the 700s. 800 is excellent, but it starts really from 300. So you've probably heard about this many times before, and I do think that this credit score checking system, as an American currently living in Europe, it will be present in other countries one day as well. In the UK, you're sort of building on that credit score system. In Poland and in other EU nations, there sort of is a credit checker without a credit score. Basically, every single time you repay a loan, if you're repaying on your credit card, they're looking at your income just as many lenders would in America. They don't have a number, so they don't really know, besides if you're just paying off your debts on time. If you're late, the banks will definitely know, all right, this is something to look out for, a red flag. And if anything's charged off or in dispute, or there's any issues, or you go into a bankruptcy, obviously those are all going to be negative reports that every single country will have some form of information online available to lenders. So in the future, I definitely think a credit score is going to be more present in certain countries, but in Canada, it's the closest system to America. For Canada, I know the score goes up to 900. So it's really similar, where in America it's from 300 to 850, and a 300 to 560 credit score is very bad in most cases. Obviously, every single lender is going to look at it a little bit differently, but that's usually the very bad, the red score. The orange score is going to be from 560 to 650, and that's a bad score. A fair score is going to be from 650 to 700, and this is the range where you're going to start off if you have zero credit, and within 6 months, you're able to get into a good credit score above 700, just as I did. This is coming from an individual who had, I believe my maximum was 729. I was 19 or 18 years old. I had an American Express Platinum card. I had a Bank of America card. I was going for a Chase, but I didn't go for that. I have a savings account, but for some reason, whatever. Anyways, I got a Credit One card, which was stupid. You should definitely avoid Credit One. And I had a Capital One card. And Capital One and American Express, I can definitely recommend to you guys. But most likely, if you're watching this and you're not from my channel, you just found this video, you're probably trying to rebuild your credit just as I am. And I found out that my Vantage score is a 512. That's what you get from Credit Karma. I logged into Chase and I saw, I think that's also a Vantage score, where I saw a 511. So on some websites, it's going to differ by a few points. Here it's a difference of 1 point. It really doesn't matter. It's not going to help you in any case with any loans, because it's such a low score that it is a very bad score, because it is in the low 500 range. But when I applied to Discover lately, because I was looking for any company that has rather good policies and they're not subprime, if anybody would accept me for a secured credit card, which I'm trying to rebuild my credit score, I'm going to tell you what to do today if you're in the same position as I am, and what I am doing and what I've already done so far. So hopefully I can get from 500 to 700 within a year and a half, worst case scenario within 2 years. All of the things that are bringing my credit score down will be charged off, or already have been charged off, and they will drop off after 7 years. For some banks and institutions and the crappy companies who buy these old debts, they will report after 7 years, but for others, the maximum is 7.5. So at worst case scenario, if you screwed up your credit report after 7.5 years, if anything is still derogatory, you can contact the 3 credit reporting agencies, and they are TransUnion, Experian, and Equifax. And all 3 will have different scores. Some of them may be similar. Some of them, for some individuals, it all might be the same. But usually for a lot of people, they're different. And lenders might choose, for example, Experian or Equifax sometimes. Or there's certain companies, there's certain cards. If it's really subprime, it's not going to be working with TransUnion. So you really have to do your research. So in this video, I'm going to show you 2 companies that I'm going to use to build my credit score back up. Obviously, there's plenty of companies out there. And if you want to fully access information about your FICO score and you want to figure out how this works, because it isn't super complex, it's just that there's a lot of details and all of these details really stack up, and then you're going to get conflicting information from various forums out there. My best recommendation is whenever you have a question, type in that question, Reddit, and usually there's going to be somebody on some subreddits that are based around credit cards, around your credit score, around FICO scores, personal finance. There's always going to be somebody who's able to answer your questions, just as I've been posting, and people have helped me out with Capital One and what to do in this case and whatnot. You're able to do that, or you're able to register an account on FICO forums. Now, FICO is the company that I think back in 2006 or even before then created the FICO score. Vantage score came out in 2006. Anyways, that's not important. So their company does a paid model, but you do not have to purchase anything. For free, you're able to create an account on their community. Maybe it's not got the best UX, but there's a lot of great questions that are posted there every single day, and there's a lot of great answers. So even before making an account, you can just type in the FICO forums, and there's always going to be a bunch of people in similar situations with worse credit scores. I've seen people with 350. I've seen people with bankruptcies. I've seen people with, 2 cars taken away from them and just a whole bunch of crap. And they're still able to get car loans. They're still able to rebuild their credit. And some people even get past 750. There are plenty of people over 800 credit scores on that forum and even sometimes on Reddit. So the best thing you can do is ask those people, hey, how'd you get there? I'm convinced that if I didn't screw up, not necessarily with the credit, the reason my FICO fell so low and the reason I fell into debt is because my income suddenly disappeared and I made too much money very quickly. I was a risk taker. I started investing in stuff that's really high risk back in cryptocurrency, and then the 2018 crypto crash happened, and suddenly 100K was wiped out, and I was negative $50,000. So that was rather stupid. I've learned many lessons. This is 4 years later, 3 years later. The whole journey started in 2017, and it's probably still going to be going on for the next year or two, but I will rebuild my credit score. I am 100% confident about that. So let's discuss about everything. First of all, what is a credit score made up of? For my American viewers and for my Canadian viewers, payment history is one of the most important, and that's 35%. And for 30% amounts owed, those 2 are going to be the biggest indicators of what your credit score is. How much credit you have, and whether you're paying on time. And if you're not paying on time, how much is it late? Is it 30 days, 60 days, 90 days, or completely just you've never paid it? And if so, is that going to go to collections, or is it charged off, or what's going on with that? And certain companies like American Express, they were amazing to deal with. Sure, the platinum, you had to pay $500, maybe it's $600 right now per year, but there was a lot of benefits that outweighed that $600. And then I had a massive amount of debt with them, and they worked with me to create a program that other companies wouldn't do at all. They're like, whatever, you have to pay up. All right, screw you. But American Express didn't report it up until like a year later, where I ran out of money. I couldn't pay American Express. I couldn't pay any company. But when I did still have money, I was paying a few $100 to them every single month without any interest, 0%. They just wanted, hey, listen, if you're able to pay it off, you're still going to be a valued customer. You're still going to be able to use their products. And that was an amazing plan, because all the other companies would give you percentages that you have to pay here. All right. Okay, if you're able to do this, then we're able to work something out with you for the next year or 2 years. But unfortunately, I ended up paying up over $25,000. The whole history is on Kubera, where I posted about how I went into debt, all that. Probably going to make another in-detailed video on here. But American Express gave me a second plan after that. And they're like, listen, you can pay it off. We can negotiate. You can pay half off and the card's closed. Or you can pay up the full amount. And this was even up until December 2020. So this is like two and a half years later, and they're still working with me, and that was amazing. But unfortunately, I'm coming back to America in the next 2 months. Sure, I have money now, but it's too late. It's absolutely too late, and that's all right. The reason it would kind of make sense to pay it off in full right now, it's around $6,500. It's not my largest debt. It is my second largest debt. My first largest debt right now is, I believe, over $7,000 with Bank of America. And that $6,500 would make a lot of sense because they would re-enable the account. You'd get that credit card and you wouldn't have to go get a secured credit card. And that American Express card would help you rebuild your credit history. So it depends on how much you're valuing. $6,500 is a lot of money, but if it speeds things up by a year or two and you need to buy a car, you need to get that home mortgage, I don't need any of that. But if I wanted to get a car loan for, not a new car, but something that's a few years old, and if it's over $20,000 or maybe even better, $30,000, but that's not even my price range. It's a stupid thing for a student to get a car that's over $30,000. But just using that example, if I was able to rebuild my credit, I'd save myself a few $1,000s in interest. So maybe that's $6,500. Who knows? You could do the math. But that yield is gone. I contacted Capital One, and sometimes it's worth it to contact them because they have secured credit cards. Your best options, if you're able to contact banks before it gets charged off, try and work with them. Maybe you're able to pay them half. Maybe you're able to negotiate even lower. Some people ended up paying 10, 20%. Because at this point, don't feel bad for the banks. The banks are already just see you goodbye. They have worse cases where people are owing them millions of dollars and they're going bankrupt and they're never going to get that money. So they sell it off for 10%. They just want any money and they want it gone off the reports. They're going into the next quarter. They don't care about you anymore. You're just a small drop in the bucket. So Capital One and American Express, and there's a few other cards like Discover. If you're a student, that's going to be a great secured card. Even if you owe money, it's good to see if you still pre-qualify. And that's different than pre-approved. You have to check that out because pre-qualify, it doesn't check your credit score. It's not going to be hard inquiry. You don't want any hard inquiries, but worst case scenario, even if you do get a hard inquiry, it's only a small percentage of your credit score. 35% is payment history. 30% is the amounts owed. 15% would be the length of your credit history, 10% is new credit, and a credit mix would be 10%. So a hard inquiry, it's only going to, knock off a few points. It's nothing huge. The major stuff is how many credit cards do you have, how much credit, utilization, are you paying it off, and credit mix, do you have credit cards, do you have loans, do you have a home mortgage, a car loan, all that stuff. So a hard inquiry is definitely not going to be a huge dent, but it's always a few points here and there. So if you're able to avoid that and you can instantly get results, I found out that with Capital One, I wouldn't be able to, and that's because of the old debt. That's only a few $100s, but it's too late to pay it off at this point. There's so many details to talk about that this is probably going to be a longer video, so we're going to have to do more videos. I'm at a point where it doesn't make sense to pay off stuff that's charged off because the 7 years, the clock gets restarted. If you suddenly contact these companies, the ones who already bought off the debt from the banks, and you just don't want to go that route because it's not going to help your credit score at this point. So anything that's not going to help, it could even make a negative impact if it's going to fall off in the next few years. And we've already, this is stuff from 2018. It's 2021. We're kind of approaching the midway point. And the statute of limitations in your state for when you could get sued, for example, Texas, it's 4 years. So next year, all of this stuff, see you goodbye. For Illinois, it's a little bit worse. It's 5 years, but that's still closing in. We're past the halfway point. There's other states that are 3, I think some 6. So you have to check it out with your local state. The first thing you could do, negotiate with banks. If it's too late, secured credit cards are going to be good. Capital One and American Express and Discover, if you've already had cards with them. With American Express, it's going to be the hardest out of all 3. But Capital One is usually the best choice. So people who are rebuilding credit, check out with Capital One. It's not going to result in a hard inquiry. They're going to let you know immediately, just an online application. Here's your social security number, your address, all your information, how much you have in income, and then So I'm in the position where I was rejected from everything. We could make a video about which secured credit cards, which credit cards in general to get in the future. There's credit unions. That's a whole different story. If you're a veteran, it's a little bit better. Actually, you're getting some really nice benefits to Navy Federal. But anyways, so if you're in the same situation as me, you've tried all that. You're not able to negotiate. The only stuff that is open right now is collections and charge-offs, which is not going to help your credit. The only thing that it can help you with is if you pay off in full, because if you negotiate, it's going to look bad on if you're trying to get a mortgage, a home loan. The mortgage lenders are going to look at this, and this is the only thing that can look good. If you have any collections open, you're not going to get that mortgage unless you get, there are mortgages that you can still get with collections, but it's going to be worse rates. And when you're dealing with hundreds of thousands of dollars, the interest, and it's not just interest, oh, there we go, you pay a few percent. It's compound interest. It grows every single year. So that few $1,000s can suddenly grow into tens of thousands of dollars. And if you fall into another bad situation, you just want to avoid all that. If you're looking for a mortgage, you have terrible credit, it's best to rebuild and get your partner to sign up for that. And there's ways around it, but that's not this video. So if you're in my position, there's two things you can do: secured credit cards and credit rebuilding programs. There's a lot of people who are going to say, oh, this is crap, but it works. And there's a lot of crap companies out there. For example, what was it? Kickoff. Yeah, so Kickoff, maybe it's not the worst company, but it just looks so funny. And there's a lot of people who are, it's super controversial. So basically you pay $1, single dollar per month, and it's a total $12 loan. The reason it's super controversial is a lot of people are going to look at it and they're going to see on your credit report, $12, like who gets a loan for $12, right? So it's going to look bad if you're trying to get that mortgage loan or a car loan. And you don't really need it. Just as there's a lot of people who are going to stack up like 5 secured credit. Why do you need 5 secured credit cards? The maximum you should get is 2. There's a lot of people who are like trying to get the 3rd or 4th. Forget about that. The maximum is 2. 2 can help you just in case you lose one, you need to pay for something. But with 1, you don't even need 2 secured credit cards. You only just need 1. And the best secured credit cards are the ones that can later turn into an unsecured credit card. But with Capital One, they stopped doing that, I guess from like 2019. So you're going to have to look around. There's a lot of secured credit cards out there. But if you're a really bad situation where you need subprime and no one's going to accept you, you're going to have to do what I'm doing, which is going with OpenSky. And there's another company, but I decided to go with OpenSky because that other company had some worse reviews and I just don't want to deal with that. OpenSky, the bad reviews basically goes like this. There's hidden fees, and you have to learn about these hidden fees. Basically, once you sign up for OpenSky, there is no credit check. That's beautiful, because if you have a 475 like I did, where Discovery told me I had a 475 FICO, but maybe that's just because it's from TransUnion or whatever they were using. Everyone else is telling me I've got a 511 or that 512 Vantage score, so I'm not really sure. But whether it's 400, 500, it really doesn't matter at this point, because it's so bad that if I wanted to rent a house, nobody's going to rent it to me. That's why I need to build my credit score. And that's why I went to OpenSky, because OpenSky doesn't check. And if they don't check, that's not going to result in a higher inquiry, which is going to worsen your credit score temporarily. Here is OpenSky. You know, it's subprime, it's not that great, but if it's secured, you're not going to get a credit card from anywhere else. So any credit card is good as long as you're paying on time. Alrighty. After 2 years, hard inquiries fall off, so I only have one hard inquiry that's still left. And that means if I do have a 511, that hard inquiry falls off in August, so a few months away. At this point, it's not worth almost anything. It's just a few points. But if it gets me 3 points, if it gets me 4 points, if it goes up a little bit, we know that in August it's going to go up. And if I don't make any hard inquiries till then, that's good, because hey, we're moving in the general good direction. So in the month of March, I signed up for OpenSky. The card's going to get delivered, and a secured credit card works like this. You send in money, and at the end of the card, they send you the money back. The bad reviews on OpenSky are, oh my God, there's hidden fees. Oh my God, bad customer service. Well, every single bank is going to have those reviews, and trust me, there's been banks like Credit One that also had bad hidden fees and stuff like that. The hidden fee is like $3. It doesn't matter, but obviously you still should care about it. So when you immediately sign up for it, you have to log in and uncheck something. That's really easy, that you don't want the paper statements, and that's whatever. Okay, there's a lot of people who don't read the fine print, and then they're shocked and surprised. There's also people who are, they don't know what a secured credit card is. They send in money and they think that they're going to get the money back in a month. No, that's not how secured, that's the whole point of a secured credit card, because they don't trust you. You're trying to rebuild your credit. So the percentage the percentages that you're going to be paying on whatever is left over after the statement each month. And we're going to have a whole different video about how you should rebuild your credit quickly, what I used to do, and how I got from like 600 to 7, basically I had no credit to 729 really quickly. Keep your credit utilization low, under 30%, but I would just buy like a Snickers bar or whatever, something that's a few dollars, leave it on for the statement. And as soon as the statement would show, pay it off, boom, it would go into the credit reports. Everybody's like, woo, the credit score is growing. And that's what we're going to do with the secured credit card. And after a year, after 2 years, when I'm able to apply for an unsecured credit card, we're going to wait a little bit till we have some more loans and stuff. There's a nice big credit mix. And then we're going to take that secured credit card, OpenSky, say goodbye. You're going to send me the money back, and we're going to be able to look for good credit cards. Now, the other company that I mentioned, because there's two companies, the other company this is different. For that credit mix, it's good to have loans, personal loans, but nobody's going to give you personal loans. So there's these companies called credit rebuilders. The secured credit cards, everybody knows about this. That's the tried and true method of rebuilding your credit, but it's going to take a little bit of time. Before you get the card, before you use it, before it reports. Same with these credit rebuilders. It's going to be a few months. But if you have a lot of bad remarks, I've got 4 on my report, 4 major ones. A secured credit card, it might not do it. It might not do it in the time frame we're looking for. So that's why we're getting a second loan. Again, no hard inquiry, 2 in the same month, but well, technically last month because I signed up on the last day. A credit rebuilder, it looks like you took out a personal loan. You don't get any money. They don't trust you. They're basically keeping money and you pay them. There's 2 credit rebuilder companies, and let me tell you what I picked. I picked Self.Inc. It's just named Self. Right now, Self. And it used to be Self Lender, so if you can't find it, Self Lender. Build credit history and save money. No credit, need to build credit, no problem. How it works. So starting from $25 per month, that's what I chose, because the more you choose, it's going to be a little bit harder for you. It doesn't really make sense, and it's not going to help you build your credit score faster. Like, who cares? So it costs $25 per month. I signed up for the 2-year program. With the ones that are more expensive, it's 1 year. But also, think about it this way. These credit rebuilder loans, it looks like you took out a personal loan. You pay $25 per month. And after 2 years, hopefully within that time frame, your credit score rose up. You got a different credit card. Because as soon as that loan's paid off, it's going to fall off your credit report, which is also going to be a negative. It's not going to be as bad as before. That's why this whole thing is good. But the main positive comes out of this because you're able to get other credit cards. So 1 year might not be a long enough time frame to rebuild your credit score. If it's in such a bad position as mine is, to get that secondary credit card, and you might pay it off after a year and it falls off, and boom, sure, it helped your credit score a little bit, but the 2 years would be better. So both the length, because these credit scores factor in how long you're taking these loans out for, the length of the account history. If everything's on time, it's going to be, the more you have on-time payments, the better it's going to be for you. So I'm paying $25 starting this month, and at the end of it, in total, 25 times 24 months, that's $600. They're going to earn $80 because I'm getting technically 521 back, because they're placing the money in a CD, a certificate of deposit. It's crap, never invest in this. But there's also a $9.57 fee, because if you use a debit card to pay, it's 30 cents, whatever. Anyways, that fee is when you apply. I already paid that. So in the end, they make $90. I have to use a debit card because my bank account is currently frozen, Polish one, and my American has 0 money. But when I come back to America, obviously I'm going to set that all up so I don't have to pay these stupid debit fees. So you apply for a credit builder account. That's super easy. You pay off your credit builder account in the specified amount of time, and each on-time monthly payment builds credit history and adds up to your savings. Some people reported that after it gets recorded, so after the first payment, just wait 2 to 3 months. It's going to vary for various people, but after the first report, if you have a really bad credit score, sometimes it can go up as much as 50 or 60 points, and then it's only going to be a few points and a few points after that. But still, some people have reported that this gives you up to 100 points. But even if it gives you only 50 points, that $90 over 2 years, you're paying $45 per year to basically boost your credit score. Of course, it's worth it. If you don't really care about credit that much, whatever, it's not going to seem worth it to you. But you're able to unlock the amount, the $520, after you've paid it off. The other company that you can look into is Credit Strong. There's some people who get both. And this is just the same thing as the secured credit cards. You don't need both. I'm getting one secured credit card and one loan, and that's it. And hopefully the next card that I get is an unsecured credit card. I'm going to use these, dispute any loans that I'm possibly able to remove from my credit score, but that's also another topic for another video, because if that goes wrong, it can also put a negative dent into your credit score. But still, either this or self-lender, look into which is best. Let me tell you the differences right now. You here used self-lender, and what were your results? Has anyone seen a score increase? If you do not have an installment loan, it helps with a credit mix for sure. I've never had anything besides credit cards, and obviously nothing on my credit history right now, so besides negative marks, so this is definitely going to help. Yes, it helped add variety to my score. My score has gone up. Same here. I initially had like a 590, had it go down to 580. I've done 3 months so far and my score has returned to what it was. My FICO 8 is 621 right now. Not sure what it was prior. Definitely worth it. Some people will say you don't need goofy fake loans to build or rebuild credit. People have been building and rebuilding for years without these silly products. Loans like these pretend loans could possibly add some points, but it's a small percent of your overall score, and it's going to do nothing to outweigh any derogatory information on your credit report. You never need it. It's a waste of time and money. But again, if you want to speed things up, in my opinion, who cares about the $45? We started a self account 4 months ago after having zero credit and buying everything. My husband's score had already increased 90 points. Actually, you don't need a credit score for that. If you have zero, anything, you never had a credit score, you don't really need it. You can use it if you want, but whatever, you can just get a normal secured credit card. But anyways, let's talk about Credit Strong for a quick second. While Credit Strong and Self both offer similar products, there are a couple of notable differences. For one, while Self places funds into a CD, Credit Strong utilizes savings accounts. The latter notes a savings interest rate of 0.2%. Who cares about that? It's nothing, it's whatever. I've been unable to find information about how much Self's CDs generate in interest, but it's $1.21 out of 520. It's obviously not a lot. Previously, another difference between the two was the administrative fee the two services charge. Self currently charges a one-time administration fee of $9 for all of its loans. It's down from a previous $15. Meanwhile, Credit Strong's admin fees vary by product, ranging from $8.95 all the way up to $25. I can't help but wonder if Self lowering their fee has anything to do with Credit Strong giving them competition. Individuals are welcome to pay back their Credit Strong loan early and will not incur any penalties for doing so. That said, it is worth noting that doing so will result in a truncated payment history, meaning that individuals might not get the full benefit. Is Credit Strong legit? Yes, it's a division of Austin Capital Bank, and that's what's going to be showed on your credit report. I chose Self, and it's like, whatever, it doesn't matter which company you choose at the end of the day. All that matters is you have one rebuilder loan and you have one secured credit card. And the next video that I guess we'll do is what you can do to dispute, because for me, it's good a little bit better because some people might have just had this stuff come up. And I've already waited a little bit. Obviously, it's still going to take years and years till 2024, 2025, 2026 for this stuff to fall off. But the longer it takes, the less important it is on your credit score. So if you dispute it early on, it's probably better to dispute it early on, because if you dispute it later on and something brings back, it's actually verified this information, it's going to drop your credit score like crazy. People have said, oh my God, I lost 50 points. I lost 100 points. So that is another method that you're either able to wreck your credit score, or it actually helps you if you have legitimate cases or you just get lucky. So that is today's video. In the future, we're also going to be discussing about how much my credit score has actually changed. There's a lot of information out there. Don't want to make this video too long. So right now I've signed up for OpenSky. I've signed up for this. We're going to pay it off the first month. I'm going to put $200 to $300 into OpenSky and leave it at that. So thanks so much for watching. If you enjoyed today's video, hit that subscribe button, and we'll see you guys again tomorrow with some crypto videos. Peace.